Hello everyone. So welcome to our webinar, Deriviatives in 2020, Challenges and Opportunities under Unpredictability. So I'm Amber from OKEx Financial Markets team, and it's my pleasure to moderate this webinar today. And let's welcome our guests. They are Lennix from OKEx Financial Markets Director, and Cohen, Head of Research from Efficient Frontier, Uriel, CEO of Moment Capital. And the introduction comes first. Could you please introduce yourself and the company a little bit? Let's start from Lennix.
I'm a financial market directors of OKEx. I appreciate that I joined this webinar today with two legendary traders in crypto. So I'm really happy to join this conversation.
Okay, maybe.
Great. So my name is Uriel. I'm the CEO of Moment Capital. My background is engineering. My first startup company was in the field of deep learning and image recognition, which we sold to Alibaba. And since 2015, I've been doing trading in Bitcoin and digital assets. Me and my brother opened several companies in blockchain. The biggest one is Orbs, which we raised $120 million for. And since the beginning of 2020, I'm managing the financial assets trading sides of our blockchain group in Israel called Moment Capital.
Thank you, Ori.
Hey, my name is Cohen. I'm 45 years old. My background is a BA in physics. I'm a hands-on researcher and a developer for more than 25 years. My background in the fields of trading, I'm one of the founders of a company called Deriviatives. Deriviatives is a HFT algo trading company in the last 15 years. We are one of the biggest players in Tel Aviv, also non-clearance member in the UX, Taiwan, Hong Kong. We are specialized in futures and mainly on options. Okay, and in the last 3 years, I'm one of the founders of Efficient Frontier that transfer our trading knowledge from the traditional market to the crypto market. Okay, and that's it.
Okay, thank you very much. So it's very nice to have you guys here. I know that you are very popular in Israel, especially in Israel. So it's very nice to have you here. Here comes our first question. So we know that in recent years, we see the world is becoming more and more unpredictable. So for example, Donald Trump became president and Brexit, the COVID-19, the oil price. So what do you think these changes will affect the crypto derivatives market?
Okay.
Yeah, maybe.
You want me to start?
Yeah, sure.
Okay. Okay, as you say, indeed, all the world become much more crazy, and the volatility is how we measure the craziness of the crypto is very high. And yes, as you say, the option market is maybe the only tools that can protect professional players from those events, if they use it right, and if not, it can emphasize the problem with the volatility. Yes, but we see it across all the world. Also the financial regular markets, the crypto market, yes, the volatility become very crazy and very dominant players in the world.
So from our side, I think that the market conditions actually make us very, very bullish on Bitcoin and digital assets. We see across the board, the macro conditions becoming more and more attractive. Money printing by all federal banks, asset bubbles all over the place, housing bubbles all over the place. So we see a lot of logic for people starting to understand better and better the value of hard assets such as gold and Bitcoin and the rest of the digital assets. So in the next 5 to 10 years, we are very, very bullish on Bitcoin and digital assets. However, as we can see in 2020, the volatility of trying to trade assets such as BTC are extremely high, and therefore makes it extremely difficult. Even if you were a believer and a big holder of Bitcoin, because of the macro outlook, you would experience drops of minus 50% of your portfolio, minus 80% even on your portfolio. And this is a market where it will be very, very, very hard for non-professional traders to be able to have a steady hand and stay in the market for the long run. This is where we see, like Ori mentioned, the need for either understanding trading better, having more experience in trading, using many diverse products and instruments in the market in order to enjoy the upside, but also be able to minimize the downside enough so that you will not be thrown out of the market because of the high volatility.
Yeah, I think I strongly agree because I see a very strange behavior, and especially in the equity market, as we obviously in the one of the most collapsing economy ever because of the COVID-19, but the stock market, the fundamental is so bad that it's undeniable fact that the stock market should crash heavily. But right now we can see a very interesting decoupling between the equity markets and the fundamentals versus COVID-19 or whatever fundamental behavior in the markets. But the stock market is actually looking very good, and even the BTC price and crypto price is getting a lot more positively correlated with the equity market too. So BTC price is actually pretty good compared with if you can take consideration of the fundamental economy. So I think it's part of the reason that I guess part of the reason that the QE, the Federal Reserve, keep heavily or aggressively buying corporate bonds that sustain the entire financial market in order to avoid substantial pressures. Another reason might be people still expecting a very heavy economic rebound after COVID-19 is completely solved by the end of the next year. So I think the decoupling is annoying to many fundamental driven traders, but I think BTC somehow will expose its benefits by completely uncorrelated with the equity market in terms of fundamental area aspect. And I think after maybe the people might realize that the equity market or the bond market actually value or overpriced, if you compare the fundamental reason, they will very likely flock into crypto, for example, like Bitcoin.
Okay, thank you for that. So we can see that lots of challenges in 2020. But we can also see some opportunities under this kind of circumstance. So we see that there are several very creative forms of tokens nowadays. So in addition to some like traditional derivatives products like futures, perpetual swap, and options, we can also see the leverage tokens and tokens which back major events are designed. So what do you think of these kind of products that from both exchanges and professional traders' perspectives? So do you think that they are good, or do you think they are very good tools to maybe make some money in 2020? Start from professional traders.
Okay. About let's start with the option market about the options market. It start to grow as you say. The perpetual market look like fully grow. Also the futures market look very good. Though OKEx is one of the leaders of the futures market, and we see some other leader on the perpetual. Yes, it's very strong market and very useful market. Still, the option market is not so solid and not so mature. We see it as let's say we are maybe the professional option trading, and we see that now it's still premature for us. it's become better and better, but it's still new. We see that the skew that derives from the option market is still not solid. Also, the synthetic futures that came from the option still very expensive comparing to other futures. So we are for sure waiting for that, and we for sure will be a major player when it will be more mature. But for now, it's a bit problematic for us to enter the game. Okay, but we are waiting for that.
Do you know how much more expensive on the synthetic futures on?
Yeah.
What is the expensive? What's the cost? What's the cost you're talking about?
The spread. Okay, let's say that I calculate the synthetic future from the option, so I take the best price, the best strike for buy future and the best strike for selling the future using the call put parity function. Okay, and you see that the spread derived from those options and the fees that you calculate with the option, I guess it maybe 5x bigger than the perpetual. It's because two reasons. One is because the perpetual is very liquid and the spread there is very small, low. Okay, and from the other side, the options player, I think maybe the maker side still afraid from big moves. So the spreaders, we can see it across all the exchanges now. It's a bit problematic. Okay, and as a algo trader player from the traditional market, we used a lot the options market only to hedge futures, okay, like regular futures, but when the perpetual is much more attractive, so you don't have any reason to use the option unless you want to fully hedge some long position with buying put or short position with buying call or something. But to use it as a major player in our portfolio, we can do it on those days.
See, and how about in the traditional markets? Do you think that in theory, that the synthetic futures should be a bit more expensive than purely listed futures? It should be, right? In theory, financial theory.
It really depends. Option market it's differently adapt between countries. In Israel, is fully adapt, okay, and the option market is, I would say it in Israel, the option market is leading the real market, okay. Let's say in Europe, the option market is not so strong. In Korea, again, the option market is very strong and is leading. And yes, on those markets that the option market is the leader, most of the players use the option market instead of the future market. Okay? The other places also, let's say in the Eurex, that in the Eurex they have option market, but the futures market is much stronger. So most of the players use the futures, not the option. Okay. But it really depends. There are some countries, especially in the East and Israel, that really use the option market correct, and then the futures market is pretty low because the options are much more flexible than the options. Sorry, the options are much more flexible than the futures. Okay. So at the end, option is also future, and future is not option. Okay, so it's really depends where the player prefer to play. Okay, so it's really depends on the country. I really hope that the Bitcoin will adapt the option also. And then the Bitcoin traders.
I think from our side is so we are trading on a day-to-day basis. We are always looking and exploring new instruments and products that are out there. We actually decided to use OKEx because OKEx is very famous for having a very solid infrastructure for different instruments and derivatives since almost the beginning of crypto trading days, 2015. But for us, because this is our business, we actually look, first of all, on two other things. The first thing we look on is liquidity. The market is not so easy in terms of liquidity, especially if you are trading relatively big volumes. If you're looking on different altcoins that are not BTC, even if you go to Ether and BCH and the other top 10, most instruments and products don't have sufficient liquidity for commercial or high volume trading uses. So this is more interesting for us than maybe new exciting products that might offer better risk reward. And the second, I think, issue that is important for us is the stability of the infrastructure and the experience we have and the exchange has and the market has with specific products. I think we saw during 2020 that many professional funds actually, I think, almost were wiped out, not only because they selected to trade the wrong pairs, but rather than that the infrastructures had troubles supporting more exotic products when the markets, for example, crash. So we had a good example in March 2020. Many of our traders tried to get in or get out of positions with high leverage, low leverage, and infrastructure-wise, it was it was not that easy. So especially, we just mentioned volatility in the first question. So during high volatility periods, I think products with liquidity and track record and strong infrastructures are important for professional traders. However, I do think that there is a lot of innovation in the space. There are so many exciting new opportunities for traders. Many exchanges are adding more and more different products and are expanding the portfolio. Obviously, all of them will mature as time will go by. So definitely, I think that we are moving in the right direction, much faster than the traditional markets, if you ask me.
Sure.
And
Sure.
the more the product will mature, the more they will be used by day-to-day professional traders.
Do you think the liquidity will be actually a lot differences if you come after the big crash in March 12? Do you think the liquidity in overall crypto market will be smaller comparatively?
Yes, we can see it. I think we can see that it's recovering, but yes, we can see the change from this day. I totally agree with Uriel about the infrastructure and the API connectivity. It's very important for the players to know that they can come in and out when they need. And we saw from time to time the connectivity issues that this is not something that we can see in the traditional market, by the way. The exchanges are a bit more stable. But yes, it's growing market, so we can understand it also, and we try as much as we can to help on that, by the way. Yes, but it's an issue. We know it.
Yeah. One point I can mention, which is it was very surprising for us, for our experience working with OKEx, is that we have direct access to the technical team of OKEx. Once in a month or 2 months, we ask the technical team to bring a new feature, a new API connection point, or even for the existing, long-term running products such as futures on OK. And the response is crazy. I mean, we get API changes on a weekly, monthly basis to support, more advanced trading needs. Something that I think is not existent in the traditional world. So.
No. You can't spoke with those guys in the traditional, and if you spoke, it will take years to change something. Yeah, for sure.
Yeah, exchange, actually, to be frank, exchange is just a 3-year business or 4-year business at most. So we were just trading UI before. So right now, it takes 3 years for overall, not OKEx, but I mean overall, to evolve themselves as within similar standards with traditional exchange. So we're growing, evolve from a purely buy or sell button to right now an exchange which can able to support HFT. But we understand that even exchange perspective, not just OKEx, we still have a lot to learn. in infrastructure perspective. Comparatively, exchange is a lot more stable if you compare it 1 or 2 years before. The latency maybe 10 times faster. In terms of stability, yeah, I think features-wise on API, we got a lot of, I think most of the exchange already have a pretty good, robust API features, but the stability of the system and the robustness of the system determines by their internal core system and also the cloud servers providers. So some of the cloud server providers is not built for exchange or high frequency matching engine, so that's why maybe some buggy moments or instability occasionally in crypto exchanges. But I think that's the fun part. The fun part means you don't need to invest heavily, just like any other traditional exchanges. You need to invest heavily on capital investment, on building hardware, building list line, or ranking really, really expensive data centers to get a direct access to exchanges. And we're not fighting in a microsecond level. We're still talking a millisecond in our world.
Yeah.
So the market is relatively fairer. You don't need it's not an arm race. You don't need to spend millions first and then you trade crypto. So I think that's part of the reason that might be a little bit more market inefficient compared with traditional models. That's also the fun part.
Totally agree with that. Another issue is that I think your game is much harder because in the traditional market to become a player it's a month's process, and to become a player with an exchange like OKEx, I guess it's a 1-day process or less. Okay, so I guess you have maybe 10x concurrent users to the exchange. Okay, it's not like the regular traditional exchange have a lot of concurrent users, but as a pretty open exchange, I think you have 10x concurrent user that came from all the world 24/7. Your battle is much harder, for sure.
I think there's another topic that is not maybe 100% connected to the question, but that I think is a bottleneck for the market and exchanges is the topic of security. From our experience, especially if we want to scale a fund and bring in more traditional money inside, one of the difficult questions for us to attract this kind of money is the question of security. And I think over there, so on the backend side, whether it's cold wallet and hot wallets, I think our industry did a lot of work to secure digital assets. But in the interface between custodianship and exchanges, and specifically in the exchanges themselves, there seems to be still a lot of work to be done in order to give enough confidence for big traditional players to come in with big money into the digital market. And once again, I think there is a lot of innovation in the space. We know companies in Israel which are doing a great work. Also companies abroad, such as Fireblocks and Copper, that are integrating with exchanges in order to enable trading maybe on a credit in the exchange while the digital asset stays in custodianship. This is another point I think that is critical for professional traders and big hedge funds. And the infrastructure, I think, still needs another 1-2 years maybe to enable big hedge funds trading safely in our environment.
Yeah, you're right. I think the off-exchange settlement is definitely something very interesting for exchange to work. At exchange perspective, we are pretty welcome that the client will, if they want to put somewhere, so with these digital assets outside the exchange when we settle post-trade level on a daily level or even 15 minutes level. We are not a custodian. We're not in the custodian business. We don't need to store in innumerable amounts of tokens. But right now the problem is we don't have a big custodian with proper license, with proper financial status, with proper insurance policy, with proper confidence that they are sufficiently bigger. Each counterparty is sufficiently bigger than major exchange or exchange like Binance. So even maybe Binance got hacked for 4,000 BTC, they just pay right off, right? But if you had a custodian for 4,000 BTC, we're not unsure that they can pay off. So maybe one day, or a Fidelity or a bank decide to go into digital asset space and they offer custodian solution, I think we will be very happy to connect with them. 5 blocks, company like 5 blocks, company like Copper, we definitely want to explore more in depth on cooperation, at least in a small scale.
Interesting.
Yeah. So Amber.
Yeah. So you guys mentioned that option market is true enough, but we see that the industry is growing. So actually, we see last year in 2019, it's like a pivot point for derivatives products such as futures and perpetual swap. So the trading volume of these products has reached the highest point ever, and more platforms are launching options products, especially this year. So like, for example, OKEx just launched the options in the beginning of this year. So what do you think would be the tipping point for the options market? And what do you think would bring, like, what kind of events would bring the options market to a tipping point?
That is the question for Ori.
Okay. Okay. For now, I think as you mentioned, that there are a lot of exchanges, and most of them start now to open new products like the futures, perpetual, regular futures, move structure, option structure, and all of those types. It's look like that everyone try to find the next things. I think for now it's good thing, although we have the major exchanges like OKEx, Binance, and others that leading the product, leading the industry. And again, as Uriel said before, it's not only the matter of which product that you have, it's also a matter what the trader think about the exchange and how much money he think that he can put on the exchange and not only on the product. But I think it's good that everyone try different things. Maybe at the end it will come to be similar to the traditional market, and maybe it will be a bit different, and it's good. And I guess it will take maybe 1 or 2 years that it will be more solid and more unified. It will help a lot that the major exchanges will have the same products and not different products. Let's say about the option market. So all the options market all the expiration will settle in the same day with the same index price. But yes, now it's very diversified. But I guess it will come to one point that will be few leader exchanges with few different products, and then it will be much easier to enter to the game, also to the bigger player, that they will understand the products. But we can see it's going fast forward, movie like the traditional market move. Okay? When I started with the option market in Tel Aviv, it was better than the option market today in the crypto, but it wasn't so far from now, and it took 10 years to improve. So I guess for the crypto market, it will take a top 1 year, okay, not more.
Yeah, I have a question.
Then,
I don't understand I don't have a solid understanding of history of the traditional future option market. So my question is to the guest is most likely what does it take for retail's customer to really got themselves into option market? We see a very successful story in Korea option market. We see a pretty good successful story in Amsterdam option market and also Israel option market, and somehow India option market and even Moscow. So, but we see some failure option market like in Hong Kong option markets or even in Chinese option market. So what do you think? What it takes for retailers to understand such a complex derivatives product?
It's a good question.
Yeah.
I think the retail, we have the Korean situation that the retail really like to bet, okay, and they use the option market for betting. Okay, I'm not sure the retail player can use the option market in a smart way. The real users of the option market is the institutional player, okay, that want to, let's say, buy $1 billion of Bitcoin, but cannot allow themselves that the Bitcoin will go down below 10%. Okay, so they are okay to pay monthly retainer, let's say, or monthly insurance that will cover the big losses. Okay, and I think also in Israel it's by rule. Okay, if you are a big funds and you manage the retail money, I'm not sure you can go, as we call it, naked on some on the index. You need to protect yourself. So the big players of the options, I think the institutional player, there are some retail that can, and also from the other side is the big HFT players. Okay, like us in Israel, we made around 5% of the daily volume without any directional decision. Okay, just buy and sell option during the day. Okay, with the skew and everything, and we made between 5 to 10%. Okay, without any need to really edge ourselves. Okay, only to trade on option to make money. Okay, so this is one side. The other side is, yes, the real institutional that play with the option because they need to edge themselves, or again, if it's the cheapest option to take position, long or short. Okay. About the retail, they need to be a bit betting player. Maybe you can wrap it maybe more easier. Let's say if you want to buy Bitcoin, so put a button near the Bitcoin if you want to buy insurance. Okay, if you send them to the complicated option market and they are not a betting player, I'm not sure they will find themselves there. But again, there is a lot of need from HFT players and big institutional. Okay?
Yeah, I think that. Sorry.
Sure.
So first of all, I want to say that Ori's last point is very important, and it was about coherency and consistency between exchanges. One of the hard things to do, I think, for retail and also for maybe professional traders, because that each instrument and product is complicated by itself, if we add the complexity of having different flavors in different exchanges, this also increases the magnitude of complexity, which makes it harder for retail and funds to be educated on the products. And the second thing that I think that we liked on OKEx, but I think this is something that can also be improved, is documentations and tools that can help understand the products. So it took us a while to understand the fee mechanisms for margin on OKEx and the API connectivity and so on. We are professional traders, we play with the OKEx calculators all the time when we try to fully understand what the futures are doing. So documentation, examples, better explanations of the small points that are sometimes hidden in the big products, calculators that show you what happens when you do what. I think these are little things that helped us to better research and understand even the more famous products in OKEx and other exchanges.
You're right. It will be fixed in 2 weeks.
Yeah.
Okay. Lennix, do you have more insights for this question?
Yeah, I think it's really interesting to share because yeah, that is in order to think option is a speculative tools. If you compare with 100x perpetual swap, I think the beauty of option is you don't have the risk of liquidation. If you're talking on one side bet in terms of directional bet, you don't have a liquidation or the concept of margin. It's really simple. It's just buy or sell at a fixed time frame, right? Think of that binary. It's just yes or no answer. So I think what OKEx need to do right now is to improving the documentation, improving the UI UX, improving the and make it fun, make it easier to understand for everyone. Despite the fact that it's got to be a very complex product if you really dig into and you want to play and trade the institutional level. But if you think it can think really simple with just a one-side binary product, yes or no question. It's a probability game. This can be packaged as a really simple and fun product.
I think maybe also select 1, 2, 3 big trading partners that you can manually onboard, such as design partners. They would bring liquidity for the products. They would help OKEx, I think, finalize, the products in terms of, the small details needed, the API connectivity. Once this is ready, once there is liquidity, I think organically more and more retail and funds will join.
Yeah, you're right. You're right. I think that the design partner is a good idea. Yeah, we do need more partners, not just on liquidity partner anymore. We do need consultation partners and product advisory partners, people that can help us to build the market to. If there is a really liquid option market, I think it will be benefits overall to entire crypto.
I think, as I said before, the major KPIs for us when we select an exchange, okay, the KPIs that we use is the liquidity first, if the exchange is pretty functional, the latency and the API stability for sure, the fees for sure again, and in the end is what we think of the exchange, okay? And I think this is the most important part, and again, I think OKEx have a lot of point on that because the maturity of the exchange is pretty much an important point on those times, okay? There's, by the way, not question that you ask yourself when you trade on the traditional market, but then when you come to the crypto market, you need to ask yourself if you know the exchange and if you have a good relationship with the exchange, because those things matters. Okay, so this is from our side, this is the critical points when we are selecting to be part of the exchange.
Yeah, I 100% agree with Ori, and I think he covered maybe everything. Liquidity, major factor, API stability, fees, and like Ori mentioned, the overall appearance of the exchange in terms of brand and security. Especially in our market, there is a lot of shady things, or they used to be, but we are improving slowly, whether it's projects or coins or exchanges or everything. So security, reputation, brand is very important for selecting an exchange. So these are the major points. We also like innovation. So we see exchanges such as, for example, FTX, that are very, very, very fast and aggressive and strong on innovation, becoming very successful. So I think innovation is also very important. But also, the traditional factors are still maybe stronger than that.
Okay, Lennix. So what do you think of competition in the future?
I think I agree with Ori what just said, that exchange will be eventually similar listed product overall. I think it's the competition between one, product innovation. It's also a competition between the stability and the latency of the business. So in most of the time, and at least some of the time, latency and stability somehow cannot be, or even the product flexibility is more like a trade-off between all of them. For example, like if you do want to have a portfolio margin, right, that enable you guys to collateralize every single token or every single contract, and in one buying power, so they can trade everything in one master account. That is fine. That's fine. Product level, that's fine. But at the same time, that we have to take consideration that if you do want to liquidate as fast as we can, we need to have coherent liquidation engine that we can communicate our liquidation order across different segregated database. So if one database which is situated in BTC USDT futures, for example, and we liquidate that information needs to instantly upgrade to the Ethereum database, to the other US database. So not to mention that some of the time that we need to liquidate option and futures at the same time. And we need to take consideration that in what position that we need to liquidate. Are we liquidating the delta neutral approach, or we just want to try to downsizing information, downsizing your overall position? So, and that consideration, that part of computation calculation takes time, and that will jeopardize the latency of liquidation too. So it's a game, it's an art, to be frank. It's an art of mathematicals and the balance between mathematics and system and latency. So building exchange is easy, but in order to improve to improve exchange to a level that sophisticated to service professional trader, institutional trader, in benchmarking the traditional manner is definitely not easy. But I love it. We love the experience of building this exchange with the partners. We receive great advices from legendary trader like Uri and Moments Capital. So we would love to working side by side with our partners.
Yeah, it's really hard to build the exchange for sure.
Yeah, it is. It is.
we know it.
Yeah, it is. It is. It's
Because
part of the
that,
game.
we prefer the trading size.
Also very hard to make money in crypto, but
Yeah.
no problem.
Yeah. Crypto is relatively small in terms of market size if you compare with the traditional markets, right? We just still a fraction of any stock, any major stock, not to mention Google or even Tesla right now. I mean, talking about entire crypto market.
I'm not sure about it, by the way, in terms of volumes.
In terms of no, just the market cap. In terms of volume,
Market cap.
Yeah, I think it's pretty big.
The Bitcoin, the total Bitcoin value is around $200 billion.
Yeah.
Yes, it's around. I don't know how much Facebook is now. Yes, in those numbers.
Yeah.
Okay.
So you can imagine that everyone, we're talking about 3,000, maybe 5,000 industry participants working for one stock. So it takes time for innovation, not just on OKEx perspective, but the industrial level to create more usable token or other tokenomics that is really benefits to the real society. So I think there's a lot for us to working on. It's just a very early stage still. I think it's just a 3 years to market or 4 years to market max. We are at the front row seat to see the revolution.
Okay. Thank you guys for your insight. So that's all for our today's webinar. Thank you again for joining us, and for the audience, thank you for watching this video. And if you have any questions or interest in trading or OKEx, please join our Telegram group, OKEx Trading Israel, and you can also see our panelists in the group as well. Thank you again. Have a great day.
Thank you very much.
Thank you so much again.
Bye-bye.
Bye. Nice to talk to you.